let's talk about the stock which is on our radar and the IPO which has been so much spoken about. Honasa Consumer, the owner of brand Mamaearth, makes a muted start on the bourses with a gain of about 1%, muted as compared to the recent big listings that we've seen, but it's still trading at a small premium to the offer price. Varun, who's the chairman of the company, joins us. Varun, we spoke when the IPO was announced, during the IPO launch, and every time we pressed you for numbers, you said post-listing we'll talk about that, mainly because we can't talk about forward-looking statements. Now that you've listed, the street has also given you a small premium. Welcome to the stock markets and welcome to some questioning on numbers as well. The first question, what is the revenue growth that you anticipate in FY24? When are you going to release your second quarter numbers, and has the second quarter been better than the first quarter?
Hi, thank you for having me on the show. It's an amazing day for us, for a young, less than 7-year-old company to go public, for a middle-class couple who were doing a job to be able to take a company public is the new India, and we're delighted to be a part of that new India. And from a company growth perspective, like I've said in the past, we strive to grow much faster than what the industry is growing at. And we have done that in the past, and we'll continue to showcase and deliver that in the future as well. And second quarter results should be in a few weeks, and so we will come and talk to you about those results when we have them.
Okay, Varun, hi, good afternoon. Congratulations on the listing, by the way. It's been a long journey for you, and I understand that there's been a lot of scrutiny, not just on the business, on the valuations, on your lifestyles. I'm sure it's not been easy, but kudos to you for being here where you are. Ultimately, it's all about the path to profitability, right? So if you look at it, in FY23, there was a loss of 150 crores that the company reported. In Q1 of this year, of course, there was profitability, but I'm trying to understand that by the end of FY24 and 25, can you say with a fair degree of certainty that the company will report profits?
I think what I would say is that what we have turned and seen, even in FY23, there is an exceptional item because of which you're seeing the loss. Otherwise, we were EBITDA positive, although it was only 1.5%. And from there, in Q1, we've already moved to 6%. And all of these movements are structural movements where we're clearly seeing leverage kicking in both on marketing and on OPEX. And we do, we will continue to sort of work towards ensuring that this remains a consistent trend over the years to come.
Okay. Varun, just about your ad spends, they've reduced to around 35%. What can we expect going forward as a percentage to sales when it comes to ad spends for the company? And do you think that that would probably impact your sales as well as your margins? Margins possibly, positively, but your sales probably negatively.
If you look at the ad spend ratios from 40% 2 years back to 35% now, also needs to be seen with the context that during this time, we have continued to deliver significantly better growths compared to industry while bringing this efficiency. And this efficiency also needs to be seen as a sum of parts. 2 years ago, we only had 2 brands. In the last 2 years, we've actually gone on and built 6 brands in total. So the spend has actually been happening on 4 more brands which are in young invest mode. And still the percentage has come down. So if you look at that, it shows our ability to continue to grow ahead of the market while becoming more efficient. And I think that will be the goal going forward as well.
All right, ahead of the market would mean, it's not a very tall ask because the market itself for the last 3 years has grown at 28%, whereas you have grown at 80%. Mamaearth, the hero brand, has grown at around 62%. So the street would like you to grow much ahead of the market. And you in the past have also said that you aspire to grow at least 2 times the industry over the next 5 to 7 years. Varun, but you spoke about having a house of brands, etc. as well. Can you tell us, in your current business, Honasa, how many brands of yours do over 200 crores of sales right now? And how many are likely to cross that 200 mark over the next 1 to 2 years? Could you give us a sense?
Yes, sure. Right. So, of course, Mamaearth was the fastest to 1,000 crore brand in the BPC space. Right. After that, Dermaco is the brand that we started in 2020. And in just 3.5 years, Dermaco has become a 300 crore run rate brand, right, and continues to be on a very solid growth trajectory. And Aqualogica is the third brand that we launched. Right? In less than 2 years, right, the brand has actually done more than 150 crore run rate. Right? Again, doing exceptionally well. Dr. Sheth was a brand that we acquired early last year. In 15 months, we've actually grown the brand by 20 times. That's also a 150 crore plus run rate brand basis the H1 data. As we move forward, right, we would see all of these brands growing really well. And we genuinely feel that all of our brands have potential to become 500 crore plus brands over the next 3 to 5 years.
In Mamaearth itself, what brands, what sub-brands of yours are over 200 crores, if you could give us a sense?
So Mamaearth does not have sub-brands, right? Mamaearth is a brand in itself, and then of course it's available in different categories like skin care, hair care, baby care, right? All of them are above that number.
So, Varun, just coming back to the ad spends, right? You did mention that ad spends as a percentage of sales has declined over the last many quarters, but it still stands at 35% of your overall sales, and which is very high, even if you compare it to a lot of traditional brands, say something like an HUL. I'm just trying to understand, as your ad spends are brought lower, would you be compromising on growth as well as we move forward?
Like I said, we are aiming to grow faster than the industry, and that's going to be the goal. And this is our investment strategy. Right? Building brands and investing in brands, right, is what delivers that growth, not only in the short term, but also in the long term. Right? Because once brand awareness has been built, right, the ability to sell that brands for years and decades is very high, which is what you see across FMCG industry. Right? So it's a conscious investment decision that the company is taking, right? That we are going to invest in brand building, right? And build these brands amongst Indian millennials, right? So that for years we are able to actually cultivate benefits of that brand building.
Okay, Varun, just a two-part question. One, would you probably look to even divest any of your brands after they reach maturity? Maybe if you get approached with a good valuation, would that possibly be on the cards? And secondly, you aspire to grow 2x higher than what the industry is growing at. As the person running the business, what's the biggest headwind according to you?
The first question, I think, I wish I had a crystal ball and I can gaze into the future. Right? Business strategies are built around what's the most value-creating thing to do for the business at the right point of time. Right? At this point of time, we are not looking at divesting anything, but in future, we don't know how we look at things. Right? We are in this for decades. We want to build this company and brands for decades. Right? From your second question perspective, I think we are at least not seeing any headwinds as we speak. Right? We are growing very strongly, right? And we see a lot of opportunity. BPC category continues to grow very well. Right? We also see our shares in that category continuing to grow. We see the consumer evolving and hence a lot of new opportunities coming up. We see women joining workforce as a mega trend over the next 2 decades, which is again going to drive the growth of this category. So I think we are looking at it very optimistically as we speak.
All right, Varun, all the best, and thanks a lot for joining us. Hope you continue to build businesses and get to your path to profitability as your shareholders would want you to. Thanks a lot for being with us on the channel.
And I hope you also keep giving us answers to the tough questions that perhaps the street will ask now that you are a listed entity. Wish you all the best, and we'll speak when you report your results in a few weeks from now. That is Mamaearth-parent Honasa